I'm sharing my top 3 low-cap crypto projects I'm looking at right now. These are smaller projects with more upside that I'm personally invested in currently. I spend a ridiculous amount of time learning about the tech behind crypto, listening to podcasts, reading through research, reading on Twitter through countless Twitter threads, and interviewing founders and developers directly on my podcast, Steady Lads, so I can learn for myself what's actually useful and what's really just hyped up garbage. And I think that I found 3 interesting smaller market cap projects. Real quick though, I have 3 different goals for this cycle. My base goal is to try to hit 1,000% overall gain for my entire portfolio this cycle. My mid goal is to try to hit 5,000% overall gain for my entire portfolio. And my upper stretch goal is to try to hit 10,000% for my overall portfolio during the course of this cycle. That would be a 100x for my entire portfolio. It's very unlikely. It's very difficult to do, but that's like my upper stretch goal. Last cycle with my overall portfolio, I was able to do around 4,000%. And so far, I'm up 290%, having invested every cent I own besides the equity in my house after the collapse of FTX in late 2022. And so far during this cycle, I've had some major wins that have gone up 200%, 500%, and 1,000% or more. And I still think we're really early in this cycle and that the majority of the action we're going to see is going to happen in late 2024 going into 2025. All right, first up is Perion. Perion so far has gone up 220% since first sharing it with my private community, the Obsidian Council. But here's why I think it's primed to go much, much higher. Perion is a crypto gaming play, but it's not a game. Instead, what Perion does is it invests in early stage crypto gaming deals before the average investor can buy. For example, one project I'm personally really excited about is Gunzilla Off the Grid. This game has already been streamed by Dr. Disrespect, has a AAA team, and is a fresh take on the uber popular battle royale genre. It also has Neil Blomkamp, I don't know if I pronounced that right, leading the story and world building. Neil's directed movies like District 9, Elysium, Gran Turismo, and more. And this game, Off the Grid, is a crypto game, and it's gonna have a token called GUNS with a Z. But this token isn't currently released yet, and the average investor can't invest in this game. However, Perion was able to invest early stage into Off the Grid, and that investment's held in the DAO's treasury. So I can buy Perion's token Perk as a way to get exposure to their portfolio of crypto games that they've invested into early stage. Currently, the treasury for Perion holds around $12 million in assets, and the entire market cap for Perion's Perk token is just $6 million. Their portfolio includes things like Shrapnel, Off the Grid, Lunchbox Entertainment, Heroes of Mavia, Metalcore, Mere Planet, City as Heroes, Delusion, Paragon, and a ton more. Now, Perion is more than just a DAO and a treasury. And I was actually able to interview the founder of Perion, Mitch, and get some deeper insight into this project and their goals and what they're trying to build. Here's Mitch explaining Perion's different products they've built for the gaming sector.
Perion's essentially a DAO that builds products in the gaming sector. So right now we have 2 flagship products. One of them is Fanplay. Fanplay is a Web3 wagering game, so it essentially integrates with any game that sort of lends itself to sports betting. So right now, the GambleFi sector is really hot, and Fanplay is one of the first platforms that actually integrates with Web3 games and allows people to bet on or wager on the races. It's an interesting product. All of the bets are on chain, so it's all provably fair. Getting a ton of really good feedback in closed testing. So I'm super excited to take that to market. Ideally, it's going to be out late December, if not early Jan. So super exciting times on that side. And then our other flagship product, XP.GG, we're currently in build. So the closed alpha has been released, so people can jump on our Discord and join it. But essentially, XP.GG is shaping out to be a rewards program for gamers. So gamers can play their favorite games, earn XP, get good, and get rewarded, essentially. It's an exciting platform, super cool as we're sort of crossing the Web 2 to Web 3 barrier there. So we're allowing people to play games like Valorant, Fortnite, CSGO, and earn crypto rewards on the back end, things like NFTs, access to discounts, all tiered across an XP system where users can level up and increase their rank and increase their access, essentially.
So their first product, XP, is basically like a social media type platform built for gamers. Think of games like Valorant, Counter-Strike, League of Legends, etc. Not just normal games, but that whole esports sector of gaming. And from my understanding, this platform's geared at that player base and allowing them to kind of compete against each other, go higher in the rankings, earn more XP, and maybe unlock vanity items, etc. So it's a product mostly aimed at hardcore competitive gamers. At least that was my takeaway and understanding. Their second product is called Fanplay. The basic concept is it's kind of like sports betting, but for competitive gaming. And I actually really thought this concept was pretty cool, and I could see how this could potentially take off. So those are the two products built by Perion, but as I mentioned earlier, the core of Perion is their DAO. And I asked Mitch to explain what the DAO does, and here's what he said.
So the DAO has its native token, Perion credits. The DAO funds these products, right? And so the DAO is like the major stakeholder in both the product streams. The DAO also has early on invested in a lot of Web3 games. So that's kind of the business segment I head up, is the treasury side of the DAO. So the DAO raised a series of fundraising rounds, got some amazing investors on board, Pantera Capital, Framework Ventures. And so I head up the kind of investment arm of the DAO. As of right now, we've invested in about 15 Web3 games, for everything from like pre-seed to Series A rounds, NFT rounds, kind of a whole mix across like tokens and equity, tokens of like various forms. And yeah, so we're really like, we have a great level of access to Web3 gaming, being that we've been involved pretty early. And so we do get a kind of a look at all the promising games coming out. I can tell you, I took over like between 2021 to 2022, I took over 200 calls and we only sort of backed about 15 of the products. So, being gamers, we really saw like a few key teams that we thought could execute in this space and got the opportunity to back them. So it's super exciting from the DAO standpoint to be involved with some of these amazing products, and as well building out our own products. There's a great crossover. There's many like great synergies. We can talk deals with some of the biggest games in this space, see what we can explore as partnerships. So there's a ton of exciting opportunities on the back end of some of those investments we made.
From here, I wanted to learn more about their process when it came to picking these investments. Here's what Mitch said.
I would say like our kind of thesis centered around studios a lot, like studios being able to adapt to the new tech and kind of create an entire ecosystem around that new studio and become kind of the big players in the market. There's obviously like infra plays. Infra plays are interesting. I mean, it's like at the blockchain level, there's a lot going on, but we're still kind of yet to see what the demands of a really high quality game are. And like, for example, Shrapnel, they're having to build their own app chain specifically for Shrapnel because they couldn't find a chain on market that could cater to their needs. And so like, if we kind of see this play out, the best bet might be like a layer 0 for gaming. So like the bottom layer that can spin up app chains for each game individually and sort of capture value across all of those chains. That would be a great long-term play in my mind. Maybe Avalanche that plays out, but we're kind of yet to see. They are kind of starting with the whole subnet model, but I don't know if the actual chain itself is right, just because it might be like kind of relegated to more indie games that don't have like kind of high demands on like custom architecture and infra that they need to actually execute their game well. I'm going off on a tangent here, but like DYDX is a pretty interesting example on that front. Like DYDX is now building out their own app chain because what they realized is 99% of the transactions, if they were to have everything on chain, would just be orders that don't get filled. And so they don't actually need those orders on the blockchain. They only need them in the blockchain's mempool, and they can cut down on like 99% of the transactions that they need to record. And so that's why they're kind of building out their own app chain. And so I think custom infra that's like designed to be baked into custom infra, like rollout services that can like roll out like app chains to the game's needs. I think those are a really big play on the infra side. The Shrapnel team's actually working on something quietly to kind of fill the gaps that they had and then roll that out as a service. So that's an exciting product that I think will come to market. But yeah, realistically, it's like back the best studios and back the best infra plays at the blockchain level. I don't necessarily know if distribution, kind of the Steams of Web3 are the model, just because I think we're already seeing like Epic start adapting to being a distributor for Web3 games. And so I don't know if you can compete at that level just because those guys have so much market share and so many eyeballs already. So that's kind of my take on that side.
Overall, my takeaway was that Perion is a really interesting play for me to make, being that I'm super bullish on crypto gaming going into 2024 and 2025. It's one part index fun, like you get this exposure to these early stage deals with some of these amazing games. And the second part is this exposure to these unique gaming products that Perion is building, which Perion has these relationships with these various games, these various game development studios. And so they have the means to integrate these various products with these games and gain adoption in the space. Currently, Perk isn't listed on any major exchanges like Coinbase, OKX, and Binance, meaning that if it ever were, that would be a massive opportunity for some upside. As I mentioned earlier, Perk is still really tiny, sitting at just 6 million in market cap. All right, so my base case for Perion would be that it hits somewhere around $60 million, and that would be around a 10x from here. And that's just based on their current treasury holdings, and those treasury holdings performing pretty conservatively going into the bull run. So like my expectation is that crypto gaming is going to be huge going into this next bull run. But this is me assuming that it's not going to be huge. It's going to be pretty tame and that these assets are going to perform pretty much like in line with Bitcoin and ETH, and that Perion will essentially just match the value of its treasury. That's my base case, or my like most ultra super conservative case. My bull case would be that we see a pretty insane crypto bull run. And during that crypto gaming bull run, we have one or two games that are really just runaway hits. And one of those runaway hits happens to be one of these games that Perion's invested into. In that scenario, I don't think it would be that insane to see Perion go to something like $700 million in market cap. Yield Guild Games did that during the last crypto bull run. They're sort of similar feeling. And crypto gaming, I expect, is going to be a lot bigger this cycle than it was that last cycle. That would be 116x from here. My ultra bullish case would be that not only is crypto gaming just like a massive hit during this cycle, and not only does Perion see one of their games perform really well, but on top of those things, they see a lot of interest in the actual products they're building as well. You see a lot of interest in crypto gaming. Prices are going up for all these different crypto gaming tokens, and partnerships are forged between Perion and some of these games where their products are seeing use and adoption. Also, in this ultra bullish scenario, which an ultra bullish scenario would be like the long shot scenario, we see Perion listed on something like Coinbase and Binance. In which case, we see Perion go as high as something like Wax did last cycle, and Wax hit around 1.7 billion in market cap. That would be a 283x from here, turning every $1,000 invested into a $283,000. Again, that is my ultra bullish long shot Hail Mary scenario. That is not my base case. That's like, boom, this is how high I think it could go. There's the crazy, there's the middle, and then there's the kind of like conservative, and this is the crazy. My bearish case for Perk would be a couple different things. First off, maybe I'm wrong, and despite all the evidence that I'm seeing, crypto gaming ends up being a complete flop. In that case, Perion's probably not going to do very well at all. Second, maybe Perion just never gets some notability, never really gets noticed, never really gets any attention from the market. In that case, well, obviously it's never going to take off. Third, maybe crypto gaming does take off, but all the studios and games that Perion's invested into specifically end up being complete flops. So Shrapnel, Gunzilla Off the Grid, all these games end up being flops. The real games are like mobile games over in Asia or something like that. And these games are total flops. And so Perion's portfolio doesn't do very well. That seems incredibly unlikely, obviously, but anything's possible investing in crypto. You just really never know. Overall, I'm personally super bullish on Perion. I'm super bullish on crypto gaming going into 2024. I like the risk to reward ratio. I'm impressed with the team, and I'm excited to see what happens going into, the next bull run. By the way, if you're wanting to snag the Perk token, I recommend using CowSwap. By far the best and easiest way to do that. Before I get to the second and third low cap projects that I'm really excited about, I just want to mention that I filled up all the slots for membership for the Obsidian Council, and it's now full and closed off to new members. I actually ended up selling out in just 3 days, which was crazy because I thought it would last the entire month. If you missed out and want to be able to jump in next time it opens, there's a waitlist in the description of this video. Second up is Redacted Finance. Redacted is an entire ecosystem of different products built for the DeFi space. They have Hidden Hand, an incentive marketplace for liquidity, Pyrex, a liquid wrapper solution for various DeFi products, including their own LSD PX ETH, a direct competitor to something like Lido staked ETH. Lastly, they have Dinero, which is a unique stablecoin which they say is backed by premium block space versus a typical stablecoin which is backed by treasuries. And I was able to interview the founder of Redacted, which was a great interview where we went into a ton of detail about Redacted and everything that they're building, including talking a lot about Hidden Hand and all the success that they've seen with that product. However, the most interesting thing to me when it comes to Redacted is their PX ETH product and their stablecoin Dinero. Lido is the biggest LSD in crypto, and they have a market cap of 2.6 billion and an annualized profit of $85 million currently. And Lido stake ETH yields around 4%, and this comes directly from ETH emissions. This is similar to like Bitcoin miners and how they earn Bitcoin, while ETH validators earn ETH. Redacted's PX ETH, however, earns around 8%. And its yield also only comes from emissions paid out to validators. And this might not make any sense at first for those who understand how validators work. You might be saying that's literally impossible. It can't be higher than the emission rate that Ethereum's paying out. I swear that it is possible, but it threw me for a loop when I first heard it too. Here's how Sammy, the founder of Redacted, explains it.
So the easiest way to describe it is that it's a 2-token system, right? ETH enters the system and you would receive PXETH, right? PXETH can be used to farm Curve and Convex and Aura and all the different integrations that we have for PXETH. But it is not yielding any of the staking rate, right? Anyone who's in PXETH is sacrificing that Ethereum staking yield to people that are in APXETH, which is the staked PXETH. So people in PXETH are farming the DeFi yields and they're sacrificing the staking yield to people in APXETH. The people in APXETH are farming the Ethereum yield and sacrificing the DeFi yields to people in PXETH, right? So you create this abstraction of yield between the two different tokens, and then you let people who want to farm all of the opportunities on chain have that boosted ability because so much of the supply is locked up in the staked product. And then you let the people who want to farm just the Ethereum yield have that boosted yield because they are sacrificing all of the DeFi yield to everyone else in the other product.
So it took me a second to understand this, but here's what he's saying. Normally, when you do something like Lido staked ETH, you're going to take your ETH, you're going to stake it on the Lido platform, and Lido's going to give you an LSD, Lido staked ETH in return, and that's going to be yielding around 4% from those ETH emissions. So you have this token that represents your stake on Lido that's paying you around 4%. And you can take that token and go do whatever you want with it. With Pyrex, it's really similar. You're going to take your ETH, you're going to stake that ETH with Pyrex, and you're going to get a token PXETH. However, differently than Lido staked ETH, this token does not accrue value unless you then go and stake it again. And not everybody does this. Some people will go stake that token again to actually get the emissions and rewards. But other people don't want to stake it. They're going to take that token and they're going to go yield farm it because they're going to be able to earn more than that 8%. Maybe they're going to earn 30 or 40% yield farming it in a liquidity pool or doing something like that. The ones who opt to not stake it aren't going to get any of the emissions. So that means the ones who are choosing to stake it get extra emissions coming from the people who are opting out of their own emissions. And having double the yield of Lido staked ETH means that PXETH should be able to attract some of Lido's customer base to themselves because obviously, if you're going to stake your ETH, you'd rather make 8% than 4%, especially when it's essentially the exact same risk. And again, Lido is a $2 billion project, while Redacted is a $56 million project. That's a 35x difference. The second thing that I'm really excited about when it comes to Redacted is their DYOR stablecoin. And the way that DYOR works is you get your PXETH, you go and stake it, and then you take out a loan against that staked ETH. So your staked ETH is earning 8%, and you're like, hey, I'm not going to be doing anything with that staked ETH, so I'm going to take out a loan against that staked ETH at like, say, 50%. So I have $1,000 staked in this staked ETH. It's earning 8%. I'm going to get $500 in DYOR, and I'm going to go do things with that $500. That's basically how DYOR works. And while you're running around with that $500 investing in tokens or yield farming or whatever, you're $1,000 continues to earn that 8% yield. The secret sauce to DYOR is that they built some powerful developer tools to increase adoption and usefulness of the DYOR token. And one of the biggest use cases is their custom RPC, which allows anyone to pay gas in DYOR versus, say, something like ETH. And the RPC is also MEV resistant, so it protects users from MEV attacks. Basically, think of DYOR and this RPC as tools for developers, especially wallet developers, who want to provide the best user experience for their customers. And if you don't know, stablecoins are massive money-making machines. Like, everyone is trying to launch their own stablecoin because these things just print money. Tether, in one quarter, made like $2 billion from their stablecoin. Like, these things make so much money, it's ridiculous. And if you haven't seen my video, Top 3 Cryptos I'm looking at in December, I talk about Maker and the case for stablecoins. It's really, really interesting if you want to learn more about why and how all this stuff works. And DYOR means that Redacted is potentially able to seize a piece of the stablecoin pie. While at the same time, PXETH means that Redacted is able to potentially seize a piece of the LSD pie. I also want to point out that although I'm comparing like PXETH to Lido and I'm comparing, DYOR to all these stablecoins, Sammy doesn't think of it in that same way. For him, he's not trying to beat Lido or beat Tether, but instead he's trying to serve a different subset of users within the crypto market. Here's how he describes it.
Again, I think, like I was describing Redacted to you before, like, sure, it's in 2022 and 2023, it was a profitable project, but it was there was a glass ceiling in terms of how much we could grow because it was such a niche offering, right? And I think with here, like you have different, you don't have to, everyone doesn't have to work towards getting their mom onboarded into crypto, right? You can service different user segments that exist in Ethereum because there's so many different people, right, that want different things out of Ethereum. And for us, it's like, again, like, Lido is trying to make staking ETH simple. There's nothing wrong with that. And like, sure, they might get more TVL, but for us, like, we might be able to make more money on less TVL because we're giving some people what they want, right? And the same is true with the stablecoin. Like, sure, you have to sacrifice on things like your LTV a little bit to be able to collateralize it with different things. But at the same time, now you have a system where you can stay long ETH and have a stablecoin and borrow against that long position at the same time, right? So I think that like there's a whole like plethora of opportunities that exist in the space, and it's about like capturing and owning the trade. It's about owning the trade that you offer to users, right? I know that I can give people the trade of long your staked ether and borrow against it. Whereas USDC, the trade they're offering is like, give us US dollars and we'll give you a stable coin, right? Both of them have very viable opportunities, but they're trying to solve two different problems, even though it's the same product.
The token for redacted is the butterfly token. It governs Pyrex, redacted, DYOR, hidden hand, etc. And it earns yield from all the fees collected across all these different protocols. So let's get to price predictions. And as always, none of this is investment advice. None of this is me telling you to buy these cryptos. Crypto is risky. You should do your own research, and copying YouTubers is a great way to lose all your money. Very serious about that. You actually have to know what you're doing if you want to win long-term in the crypto market. Talked about it a million times, but I genuinely believe that if you're just blindly copying YouTubers, you are going to lose. Even if you win, eventually you're going to lose. So again, not investment advice. Think of me as like a giant Pinterest board where you get ideas and education and just my insights and thoughts, but not as like your financial advisor helping you pick crypto ideas. That is not my role at all. My base case for the butterfly token would be that it hits around $500 million during the next bull run. And that would be around a 10x from here. I think LSDs are going to continue to dominate going into the bull run. I see something like Lido going from 5 billion to maybe 10 billion. So it just doesn't seem that insane to me that something like redacted, which yields twice as high as something like Lido, couldn't capture a piece of that pie. I think that it can, and I think it wouldn't be unreasonable to say it hits something like 500 million. There's also the reality that like during a bull run, really dumb projects hit 500 million all the time. So it's by far not out of reach. My bull case would be that things like PXETH and things like DYOR actually gain some pretty decent adoption and traction, and that people start staking their ETH with redacted because who doesn't like double the yield? This in turn leads to more people minting DYOR, and like they get a decent flywheel effect. And again, I'm not thinking that everyone will do this, just like a niche customer base within the crypto market ends up doing this, which is enough traction for Butterfly to grow. And that growth attracts the eye of retail during the bull run, allowing redacted to hit something like 2 billion in market cap. And that would be around a 35x from here. And keep in mind, as I mentioned earlier, that I believe Lido can go a lot higher than what it is at today. So I'm not saying that it's going to beat Lido or anything like that. I'm saying that, if redacted goes to 2 billion, maybe Lido goes to 10 or 15 billion. I don't know, because goes higher than that. I also want to point out that during the last bull run, if redacted had been at 2 billion, it wouldn't have even been in the top 50 crypto tokens because there were so many other projects that were much higher than that. My ultra bull case would be at the same time as all this, the same time that redacted is getting all the traction, the pie for things like stablecoins and things like LSDs grows substantially. So like we're seeing stablecoin market share grow a lot of people are using it. We're seeing LSD market share grow a lot of people are using it. This is in part because of a lot of the attention that maybe ETH and these products are seeing from TradFi due to the ETFs, etc. And this allows a lot more room for growth for redacted and its products. On top of this, I expect restaking to be pretty big going into 2025, and redacted decides to launch their own restaking token. Now, Sammy never mentioned this. He never even hinted that they would do something like this, but it would make a lot of sense. Lido already won market share when it came to LSDs because they got to market first. But the race for restaking tokens is still up for grabs, and I think there's going to be a lot of people competing to be the #1 protocol. And with all of redacted's other products, I think that they can make a solid play at this. And if they did, and they were somewhat successful, I don't think it would be that insane to say that they could potentially hit a $10 billion market cap in this ultra bullish long shot Hail Mary scenario. And that would be 175x from today's prices. Last cycle, Shiba Inu, Algorand, Litecoin, and more hit higher market caps than that. And if history repeats itself, Bitcoin's gonna go like way higher than it ever has before, leading to a bunch of other tokens going way higher than they ever have before, and kind of our perception of how big these things can grow will likely change during this next cycle. Now, my bear case for redacted is a couple different things. First off, this is a smaller team with less eyes on all the code, etc., which means there's more risk for smart contract errors. Secondly, there's quite a few projects building somewhat similar stablecoins. This idea of like backing a stablecoin with staked ether isn't a new thing. There's a bunch of them doing it with Lido staked ETH. There's a bunch of it doing with like Rocket Pool staked ETH, etc. Redacted obviously has some unique value prompts in certain areas that maybe these other protocols don't have as a whole, but that competition could eat into this overall thesis. Number 3, their RPC vision for like getting their RPC implemented with these wallets is a pretty grand vision, but to me, the path to them getting there remains really unclear. Like I don't see how are they going to go from point A to like getting this implemented to wallets. I have no idea how they're going to actually do that. So that kind of remains yet to be seen. All in all though, obviously I own Butterfly tokens. I've bought it and I have redacted in this video right now. So I'm betting that overall they do pretty decently. Third up is Kaneko. Kaneko is a crypto gambling platform similar to something like Rollbit. And my thesis with this one is actually pretty simple. Rollbit does around $50 million a month in revenue, proving crypto gambling has some serious legs. Rollbit also sits at around 424 million in market cap. Kaneko, by contrast, is sitting at just 10 million. And Kaneko is built on Solana, which has been receiving a ton of attention lately, and I expect to receive a lot more attention once retail finally shows up. And while it's already up 700% since I first talked about it, I think that there's some huge catalysts that could potentially send it much higher. In fact, I was able to get an interview with the head of business development at Kaneko and get some insight into what they're building and where they're going. Here's Josh, the head of business development, describing what Kaneko is.
Yeah, so Kaneko is a Solana-based casino and sportsbook. It's been around for over a couple of years at this point. And, Kaneko, the token itself is, benefits from the success of the platform. But, I think out there, I encourage everyone to sort of go on the website and try it themselves because, I'm convinced it's the best, UI, UX out there. I obviously gamble myself and, I've tried the Rollbits of the world, the Stakes of the world, as well as, the UK betting platforms and the US betting platforms. And I think of the crypto casinos and sportsbooks out there, Kaneko is, the best UI, UX. And then again, like I said, the token basically benefits because a third of the platform profits are used to buy back K&K on the open market, and 90% of that is burned, and 10% of it is distributed to stakers.
So as you can see, Kaneko is really similar to Rollbit, including with the buyback and burns. Next, I asked them how they're different than Rollbit, or like kind of what sets them apart. Here's what he said.
Yeah, I mean, look, Rollbit, I think, is a great platform, and I think a lot of the tailwinds we have, Rollbit also will experience. I would say what Rollbit has done well is, they sort of went out pretty heavily with getting involved with some of the larger crypto influencers. Obviously, Gainsey was a pretty big one for them, and they had a lot of success with referral links, and again, it's really the crypto Twitter influencers for the most part that sort of helped grow their user base. And they have some good ideas out there. I think there's some things that set us apart. I think the tokenomics for Kaneko are far superior to a Rollbit. But in terms of the actual platform itself, I think we have a better UI, UX. If you go to place a bet on both websites, you'll find, it's quicker to do it via Kaneko than it is to do it via Rollbit, which is one thing. People don't want to see a rotating screen whilst they're trying to place a bet. They want to get on, place their bet, and then watch the game. That's sort of the main thing we have, and our VIP reward system we have is good, and we've obviously looked at all the competitors and tried to make it a bit better than anybody else. We have a volume leaderboard, which again is aimed at increasing volumes, and we're actually launching today a referral leaderboard. But the ref links themselves have a lot of joy, but really just sort of incentivizing that by, in addition to the regular referral awards that you get at a Rollbit, we're going to have a leaderboard and reward our best, sort of referrers. But again, it's for us now, we're really in the stage where we love where the platform is at. It's now just a case of onboarding as many users as possible and increasing the volume, which obviously should flow down to profits, which will then, increase the monthly buyback for K&K. And it's sort of a flywheel at that point. K&K will start to go up. People invest in K&K. When you're invested in K&K, you're more incentivized to, push friends and such to use the platform. And then, from there, sort of it all should gain momentum pretty quickly.
He talked a lot about how paid influencers are a huge part of Rollbit's success, which, by the way, I wasn't paid or given any sort of perks whatsoever to make this video. I do, however, obviously hold the K&K token, which is why I'm talking about it in this video. Anyways, according to him, Kaneko hasn't been doing these same marketing tactics on the same level that Rollbit has, but they're about to start doing those things to start pushing more and more users toward Kaneko. He also mentioned that he thought Kaneko's tokenomics were actually better than Rollbit's. I asked him why he thought that, and here's what he said.
Yes, I mean, we don't have an NFT. The only thing we have is the coin. Everyone is incentivized the same way. The team owns tokens. They start vesting in about 18 months, and they invest linearly over a 2-year period. And we have this promise to deflation. So every month we're going to be deflationary. So if in a certain month the buyback isn't sufficient, for us to vest those tokens, we won't vest those tokens, which means there'll never be a month where there'll be more K&K outstanding than the prior month. So we've bought back around 30% of the supply in the last 15 months, and really that's with minimal marketing of the platform, which is kind of insane. We really started the marketing push early December, and these deals aren't particularly quick to come by. We did our first AMA about 10 days ago, which is kind of insane, but we were really focused on, you don't get too many chances to get these customers, and maybe if anything we were too critical of making sure the platform was perfect first. But now the platform, we feel like is in a very good spot. We're obviously going to keep launching additional features, but now it's just a case of going, ham on the marketing and attracting as many users to the site as we can.
So obviously he made a really big deal about how it's a critical priority of the team to keep the token deflationary, even going as far as holding back their own vesting schedule to keep that token staying deflationary. At least that's what it sounded like he was saying to me. And if you don't know what deflationary means, it just means that the amount of tokens there are in circulation actually shrinks every single month. For example, on the opposite end of the spectrum, in the US, we print money to pay for things all the time. This causes inflation and it makes things more expensive as time goes on. So it used to be that you could buy a burger for 5 cents. Now it costs about $5 to buy a burger. Well, the opposite of inflation is deflation, and it typically makes that token more valuable. All that sounded good to me. Next, I wanted to know how the revenues were looking, like how much money are they actually making as a protocol? Here's what he said.
So we're doing 5-ish of revenues. And again, that's sort of spiking. In December, there was an increase of over 100% from where we were in November.
When you say 5-ish, what do you mean by that?
5 million of total volume.
Total volume. And how much of that is actual revenue?
Yeah, I mean, you'll see on the 5th when we report it. I don't want to give it to you ahead of then, but sort of the general house edge on these is sort of a couple of percent.
I wanted to know the exact numbers, so I pressed him further, and it sounded like they're making around $100,000 a month, but that maybe it had gone up recently and was actually a little bit higher, which is obviously way smaller than Rollbit, but considering they're much smaller protocol and they're just getting started on their marketing, I don't think it's that insane, or like it's not a huge deal breaker for me. After that, we talked about a lot of other different things, and he shared with me that he also holds the Rollbit token as well, and that he actually thinks the entire crypto gambling sector is primed for a massive move forward going into this next bull run.
I know we think 50 million, is a lot for Rollbit, and they drive a lot through the crypto futures trading platform, which, from a legality perspective, we really don't like. For us, it would be extremely easy for us to launch that platform. We really don't want to go there because we want to make sure we're 100% compliant with our license, and that sort of maybe is slightly in the gray area. So for us, we're going to focus on being, the most profitable and the biggest sportsbook and casino we can be. But we see how much is flowing into the space and how much momentum is in the space. And for us, that's why I owned Rollbit too. It's because I see how much is coming in. It's not just Kaneko, right? We're going to do our best to be the best in the space. But the space as a whole is going to have tremendous growth. That all players within the space should, be able to steal some of that pie growing. It's not just a $100 million market, and we're fighting over who gets that 100 million. It's it's really like a massively growing space.
After going through all this and talking with him, my big takeaway was that obviously the crypto gambling sector has found some sort of product market fit, with Rollbit making around $50 million a month. Connectco is obviously a much smaller platform and it's producing obviously much smaller revenue, but it has a really similar or maybe even slightly better UI UX, and it's built on Solana, giving it some tribal alignment with the Solana community. Connectco seems like they're a smart team who knows what they're doing and is in the process of a massive marketing push to get more users onboarded to the platform. The KNK token is the platform token and it's currently deflationary, and they believe that crypto gambling as a whole is primed for massive growth, considering that the average crypto user has a really high risk appetite, and with the bull run coming, it's inevitable that there's a lot more users transacting on chain. Okay, so let's get to price predictions. My base case is that we see Connectco go from 10 million to around 200 million. That's around a 20x from today's prices. I think Solana is one of the places that retail is going to like to play come bull run, and I think Connectco is primed to see some action. It also makes sense to me that the market at some point is going to stop and look around and say, what's going to be the next Rollbit? And Connectco really aligns well with this kind of narrative. Again, it has a similar UX UI, it has a similar burn mechanism, and I think people are going to say, hey, this is a really small project, feels a lot like Rollbit, and it could be the next Rollbit, and then we'll speculate on it. My bull case would be that we see Rollbit start trading at something that makes more sense considering the amount of profit that it puts out each month. This leads to more users checking out the platform, more profits for the platform, and kind of is like a flywheel effect. Like the token price goes up, it's great marketing for the platform, draws in more users, that pushes up the profits, and it kind of keeps pushing that price up. And in that case, the search for the next Rollbit is going to be a much higher priority within the market. Like the higher a token price goes, the more and more the market wants to find like the next that token, because everyone wants to make that money. They missed out on Rollbit and they're like, what's the next Rollbit so I can make those kind of gains? So I think the search for the next Rollbit would just intensify, and I think we'd see more aggressive price action around something like KNK. And this is especially considering the amount of wealth that we've seen generated within the Solana ecosystem. The price of Solana has skyrocketed. They've had a bunch of airdrops that have been highly successful. A lot of people are feeling rich on Solana, and this is a really small platform. It doesn't take a lot to move up the price, and so kind of all this compounds together. In this scenario, I could see KNK hitting somewhere around 700 million. Obviously, in this scenario, also Rollbit would be much higher than it is today and would still be much bigger. And that would be around a 70x from here, which is pretty big. My ultra bullish scenario involves an overall growth of the crypto gambling pie. Crypto gambling, unlike most gambling marketplaces, can tap into a global audience. We also, as I mentioned earlier, have this looming potential bull run in 2024, 2025, and all that put together means that I think we could see Rollbit's revenue increase anywhere from 10x to 30x as all these retail users come in and trying out the platform. As more and more attention is on crypto, I don't think it's that insane to say that Rollbit's profits, if they're at what they're at right now during, with retail not involved, can increase potentially 10x when retail is involved. And obviously, in that scenario, the price of Rollbit should increase dramatically. Again, it should be a lot higher based on the revenues currently. But then usually in a bull market, it actually exceeds revenues and it's like disconnected from revenues. It goes much higher than revenues than it should. And so we should not only see the revenues go up, but we should also see the price at least achieve parity with those revenues, but then far exceed that parity and kind of get really crazy and out there. That's typically what happens during a bull run. People kind of lose connection with reality. They start looking at these prices as if they're only going to go up. And so the prices disconnect from any sort of true value and go well beyond that. So in this ultra bullish scenario, ultra bullish, like Hail Mary, crazy far out bullish scenario, I think we could potentially see a $50 billion market cap for something like Rollbit. That would allow the Rollbit killers like KNK to go a lot higher than they previously would have been able to. And we could see something like KNK at 10 billion in the ultra bullish scenario. That's 1,000x from today's prices. And again, that's not my like super reasonable conservative prediction. That's not just my bull case prediction. That's my like, man, we just threaded a needle and things went so well, it blew our minds prediction. My bear case would be a couple things. First off, Rollbit doing $50 million a month is insane. I still don't understand how that's possible, and I still keep expecting that to like fall off a cliff one day. So far, it hasn't, but if it turned out that this was just a fad or just kind of like a temporary phenomenon in the market, obviously I'd be incredibly bearish for something like KNK. Secondly, because Rollbit's doing $50 million a month, there's a lot of platforms competing for this same market share. There's a lot of them, like not just KNK, but there's a ton of other ones. So it's always possible that another competitor who has a better user experience, or maybe is doing something that I'm not quite seeing, ends up winning out over something like KNK. Third, I would definitely say it's possible we could always see some sort of regulatory action against some of these crypto gambling platforms. And obviously that would be incredibly bearish for things like K&K. I'm personally bullish and I'm willing to sign up for this risk because of the sheer potential upside that I'm seeing with the K&K token, but that's my bear case. If you want to watch each of these different interviews, I did an interview with the founder of Perion, I did an interview with the founder of Redacted, I did an interview with the head of business for K&K. I have my podcast Steady Lads where I release things like that every week. Not all of these interviews are out currently, but if you subscribe to the podcast, those will be out eventually and you can watch those in their fullness and get a really in-depth kind of view of these projects. As always, if this video is helpful, make sure to hit that like button. If you have any projects that I should be looking at, let me know in the comments below. And if you want to see more videos like this, make sure to hit that subscribe button and the little bell next to it to be notified each time I release a video. Thanks for watching and I'll see you next week.